lots of obviously geopolitical concerns going on, particularly obviously the Russian invasion of its neighbour Ukraine, and that's all obviously all played out in the markets. It's a busy week as normal, as it's the first week of the new month, and obviously we had month end on Monday. Interestingly, I was looking at some data for the first 2 months of the year, and the stock market has obviously been under pressure anyway before this catastrophe that's unfolding in Ukraine. But the S&P 500 is down 8.2% for the year for the first 2 months. It's its worst start of a new year, 2 consecutive months since the pre-pandemic, since March 2020. So. And the Nasdaq itself, the US 100 is even worse, significantly below its 200-day moving average, as are all the key US stock markets. But obviously, with the current, let me just bring up the chart. This is the dollar on the. It's not the dollar. It's the gold market on the 1 day on the 1 hour market. If you go up to the daily market, you can see. Hang on a minute. That. Obviously, gold is in. Obviously, it had been spiked on Thursday when the invasion happened to 1975 here on our CFD product here at the spot market here, 1975 on Thursday. But really, it's been big. It's broke out of its range back here in the middle of February. So gold moving to the upside and continues to move to the upside. Holding that. Obviously, yesterday we had another big leg higher, having calmed a wee bit on Monday and Friday, but another move up. So gold remains bid, as do all the safe haven assets, based on the uncertainty with regard to the situation in Ukraine and the Russian invasion there. How it is all going to pan out. Obviously, the West and Western allies have responded quite aggressively with regard to sanctions and pulling Russia out of or banning Russian banks from the SWIFT network, but it isn't all Russian banks. Europe, particularly dependent on oil and gas exports from Russia, still taking those at the moment. So the major Gazprom and Service Bank, although their stock prices have collapsed close to 90% on the London stock market, Europe is still taking gas and oil supplies from those two institutions. Excuse me. Obviously, oligarchs have been sanctioned. We've had lots of other political and sporting gestures, but obviously this is a big humanitarian crisis that's unfolding in Ukraine. So I say markets have responded accordingly. So on the gold market, we rallied really aggressively. Dollars up. Let's just run through them quickly before anybody else gets here. So here, this is the dollar index on the daily time frame. This is last Thursday when we rallied to 97.70, and we're higher again today. We're at 97.62, but also moving to the upside. Sorry, you can't see that. Sorry. This is hang on a minute. Where are we? I want to go down like that. So this is dollar index. Back over last Thursday's highs, over 97. We've held 97 all week, and we're at 97.65. So let's have a look. Raj is asking what? Hang on, Raj's gone. Sorry. Raj is asking about what will be in tomorrow market in gold. Well, gold, Raj, it continues to remain bid. Is the story. So basically, the breakout here on the gold market was back here, this big strong candle here at the middle of February. We broke out of this range, broke over 1850. We haven't really looked back since. We've moved up and moved up. We consolidated around 1900. Wasn't sure what was going on ahead of the invasion. Big rally, $75 plus on last Thursday. We moved down on Friday back to test 1880, and then we've moved higher. So again, the trend remains locked up as the tensions escalate, as Kyiv becomes you know, 150,000 Russian troops possibly looking to lay siege to the city. That's the word I thought. Siege was the word. So it's not looking great, and it's very sort of catastrophic in that city and other cities in Ukraine. So gold, as far as the markets are concerned, safe haven bit. So gold's up, as I said earlier. Dollar is up. Dollar index is up. The euro is getting hammered. We've been under 111. We're at 111.87 at the moment. Euro's particularly vulnerable to the situation out of Russia, with the cutting off the Russian stock market, cutting off the Russian central bank, SWIFT being cut from many Russian banks, although not all. As I was saying earlier, Gazprom's still shipping gas out of Russia. It's still being paid for. Interestingly, as well, uranium. 40% of the nuclear power industry in the United States relies on Russian uranium. So it's, you know, lots of strong lobbying going on there in Washington that they don't get sanctioned. But there's more sanctions to come, as the president mentioned, perhaps in his State of the Union speech last night when he's talking. Putin has no idea what's coming. You know, major US corporations and European corporations and the global corporations moving out of Russia, not doing any business with Russia. Yesterday it was ExxonMobil, Boeing, Airbus this morning, BP and Shell had announced selling big investments in Russia. $25 billion hit looks like BP are going to take on the selling of their share of Rosneft. But yeah, that was continuing. It's very scary times we live in. So Euro's under pressure. Aussie and Kiwi, on the other hand, have sort of moved up a tad. Aussie here is holding that key 72.70 area. We've been as high as 72. This blue line here is our top of the market. Here is at 72.92 from yesterday. So Aussie's holding up. But as far as gold's concerned for tomorrow, obviously there's lots of data coming out this week as well. We've had some strong PMI data, some mixed PMI data as well. We've just had ADP numbers, private payroll numbers out of the United States, and they were much better than expected. 475,000, the ADP number, private payrolls for this month. 370,000 was expected, so it's 100,000 better after that big drawdown last month. So non-farm payroll, but obviously of interest on Friday. More on that in a wee while. We've also had OPEC meeting today. OPEC, unsurprisingly or not surprisingly, have agreed to keep their output around the $400,000 barrels a day level. If we look at oil, oil's been a major beneficiary of this big risk on mode. So, sorry, risk off mode. Oil's rallied very significantly here yesterday, and we're currently trading at 106. So this is, if I go to the monthly chart, let's look a bit messy. You can see where this takes us all the way back here. This is July 2014, so 7-year plus highs. We're over the key $100 level. We're trading at 106, and you can see this is the high from those. This is monthly chart, remember, guys. So this is July 2014. This takes us back to the middle of 2013 as well. So 7-8-year highs for US oil. Brent is touched 110 this morning. OPEC not doing anything to push more supply onto the market, and that's pushing prices higher. The situation, lots of chatter a couple of weeks ago about Iran supply coming onto the market. That seems to have stalled. Obviously, the world's focused on what's going on in Ukraine at the moment. So those, the talks broke down, but they can't talk forever between the Western allies and Iran. So yeah, that was quite positive early part of the talk. So oil, again, another one just remains bid. How high can it go? Well, it's trending higher and it's moving higher. So don't fight the trend, as we say. So gold, yeah, let's have a look. Let's go back to, so gold, there's our gold. It's bid. It's rallied really strongly yesterday. Obviously, the initial target would be that 1975 or 1970 area that we pushed to on the intraday hiatus last Thursday. So remember, we came down Friday Opened up on Monday, then closed down actually on Monday. Strong day yesterday, and we're down currently at the moment for gold. So there we go. Syed, what will Aussie dollar go? Will Aussie go down? Well, interestingly, I say with the dollar's bid, but the commodity currency complex are receiving a support because commodities are up and bid. Although Australia obviously isn't an oil producer, it's a big gold producer. It's a big coal producer still coal, the dirtiest of all fossil fuels, still in demand. And iron ore is another big export from Australia. So Aussie dollar has been bid on the commodity complex bid. So we're holding this level here, the 72.70 level, as I said earlier, and 72.92 is our weekly high. And that again, that beats last Thursdays when the invasion took place. Hang on a minute. Yes, that's 1 hour now. Hang on a minute. Wednesday, Tuesday, Monday. No, I'm talking about the other way around. The highs we were at. So although the dollar's bid, the Kiwi CAD also bid as well. So it's rotating. The key support this week is here at this 72.45 level. You can see this here on this 1 hour chart. That's a key support area. And we're currently sitting right on this key resistance area at 72.70 and then 72.90 to the upside side. I don't know what time frame you're trading on, my friend, but that's the range that we're currently in this week. We could easily, go down to this. The line here, the yellow line here is .72, so we could easily go down and test that. But at the moment, Tuesday, Wednesday, and Monday, Tuesday, Wednesday, here, Monday, Tuesday, Wednesday, here we are. We're holding that, so we're holding that range there. Between the blue line, two blue lines, and that yellow line there, at pivots through there at 72.70 for the Aussie dollar. Remain dollar yen. Again, both these currencies are safe haven currencies, so they've both been in demand. We've been sort of pivoting through 115.00. We went to 115.50. Let's have a look at the. So actually, I'll look at the chart. Here on the daily time frame. I was talking to somebody else about this recently, Romain. As you can see here, the big yellow line up here is the 116 level, so 116.00. We got to that mid-February. We also got to that in the early January, so that's a key upside resistance, the big round 116 number. The high on the second day of trading in January took us to 116.30. So 116 and 116.30 is a clear resistance channel, and since then, really, you can see here we've not moved a great deal in February. So again, strong up day today, but we've had some strong down days as well. So the 115 level here, the next big down round number is this yellow line here, and we went under that on Friday. We went under that. On Monday. We went under that yesterday to start the new month. But we're pivoting through it basically. So that's our pivot area, the 115.00, and we've moved more strongly higher today to 115.40. Okay, so if you're trading this on an end of day basis, I wouldn't be, because it's not doing anything. It's flat. It's channel bound. The moving averages here, you can see you're flat. You want to be looking at your oscillators for the top of your channel, bottom of your channel. On an end of day basis, our top of our channel now sits at that 115.50 level, and big support is just below the 115 level at 114.80 level as well. So there's a 70 pip range of support really since the invasion 5-6 days ago. So that's your range for dollar yen. On an intraday basis, it's moved down into that range yesterday here, this 1475 area, this range here, this 1475, 1480, this 10 pip range we saw yesterday. And it broke out of that early this morning here on our crossing strategy here. Stalled at just before 115, but that was a big, strong channel. Change the color on that so you can see it. That's our break this morning for dollar yen, and it's been bid ever since basically. So here on a daily basis, today's traders, dollar yen is bid, and it's just kept going up all day. Thanks very much. So trailing our stop, you'll be trading your stop loss up, and last hour was quite a big one. We went into this previous resistance here, this 14.42 area. Next target, I say, to the upside will be 15.50. Whether we get that today or not, who knows? But that's still trending quite nicely to the upside. Remain dollar yen on the daily basis. Remember, there's lots of data to come. We've also got Powell's speech later on. We've got, where are we? 20 past 4 server time. We've got US stock markets opening in 10 minutes. We've got the Bank of Canada with their rate announcement, expected to raise rates by 25 basis points. We'll come back to the CAD in a minute, and the oil market later. It may have been coloured by what's gone on with the actual invasion and the economic consequences of that for Canada, as the Bank of Canada see it, but still expected to raise rates. The market's still pricing in a 25 basis point announcement in about 40 minutes. Hopefully we'll still be here for that, having got impact there on the CAD. While we're talking about that, let's just have a look at the CAD. Dollar CAD been looping lower. This is the 1 hour chart again, looping lower since Thursday's hiatus up here at 128.75. Big sell-off on Friday, recovered Monday initially in the early Asian session, then dived through the US and the European session, and we found some floor here on Monday and Tuesday around this 126.60 support area here. Bounced off that into close yesterday, but we stalled at the 200-hour moving average here at 127.40. So quite a big range for dollar CAD. Lots of conflicting data, obviously, for this pair. Obviously, the gold market supporting the Canadian dollar. Dollar itself on demand because of the worries out of Ukraine, and we're back down again this morning or today. So 126.88 we trade at the moment under the key 127. So going forward for the rest of the day, can we recover 127 after the Bank of Canada, or will we break below this low from yesterday and earlier in the week around this 126.60 area? If we go up to the daily time frame for the dollar CAD, you can see it's sort of been sliding sideways since the rally on Thursday. So Friday was down, Monday was down, Tuesday we bounced, and we're a bit engulfing candle at the moment. So we're getting a bit range bound here on a daily basis. But let's see what the Bank of Canada say later, if indeed they do move rates. Okay. Osama, I want to know if Hot Forex will be available on TradingView. We're not. It's something we're looking at, Osama. Okay, so just watch this space. Basically, we have been on TradingView before. They're messing about, to be honest. I probably shouldn't say that on here, but yeah, they're messing about a bit, and we've come off at the moment. So, well, let's see what happens. But yeah, there's some really nice charts. Lots of good people, obviously, on TradingView. A growing cohort of people on TradingView, and I say some really nice charts. Sareem, how could these factors affect the gold market performance this week? Plus your thoughts on JMCC meeting. Right, let's do this backwards, Sareem. The JMCC meeting, again, the news leaks like a sieve, that meeting. It's never very quiet. But they've announced that they're not going to do anything, basically. So they're keeping output at 400,000 barrels. Hang on a minute. I've got some questions on Facebook that I haven't found. Yeah, they're looking at output of 400,000 barrels. So they've kept this for about 5 or 6 months now. It started sort of November. They were talking about perhaps increasing, but as you can see, we've had a really strong rally in the. I need to show you down here. This was the beginning at the end of November. If you can see this area here, and hang on a minute. It's not. Can't see the charts. Can you see the charts? Yes, you can. Yeah, sorry. So down here, you can't see me, but never mind. Don't worry about it. So down here, end of November, beginning of December, we were down, all the way down here at $65. $65, guys. You know, it went even lower, didn't it? We were testing $60. So here today, we trade at $106. A huge rally, and that's just been supported by the low inventories. The persistence of the OPEC not going to increase production, not put any more, turn the taps on, so it's pushed up price. That's obviously going to still have a follow-through effect on inflation globally later in the year, because this is a huge input cost for companies and businesses and households, the energy complex, and then obviously the crisis, the war in Ukraine, and the world's second biggest producer of oil, third biggest producer of oil, depending on how you want to measure it. Russia being ostracized by the global market. So that's pushed the price higher. And markets hate uncertainty more than anything else. So the JMCC, Cerium, haven't done anything about that really. So kept it on. We're bid. Gold oil is on the up, and I say we're at 7-year, 8-year highs. As we saw earlier, if we go back to this chart on the monthly basis, this is a monthly chart. We look here at 106 where we are now. We go all the way over here, and that takes us down here to actually, sorry, let me just hide your comment because you can't see. This is hope you can see that. That's July 2014 when we were last around this level. So this monthly, remember, so 2014, 2013, we're up at these $100 plus a barrel for US oil. So quite a significant bid. The second part of your question, the first part of your question about the gold market, again, similar story. Gold is bid for a different reason. It's a safe haven asset. It hasn't been responding directly as you might expect, given what's been going on. But certainly on Thursday, when the invasion was triggered, we went to 1975. So again, technically, lots of charts, lots of charting software, lots of technical analysts, lots of trading robots, and the auto traders will have that penciled in. It's still a key target area there. So 1974.35 as it was on there, but call it 1970, 1975 is a target area to the upside. We had a strong day yesterday. So gold, remains bid. I wasn't convinced of the breakout. You say trade what you see, not what you think. When we first broke out here back in the middle of February, it was a big strong candle again on the 11th of February on an end of day basis, and that was enough. It actually triggered here on this crossing strategy earlier in the month on the 7th, but it's still not clear what was going on. But that was the breakout. That's where many traders jumped in. We stalled at a key support area, 1870, for a few days. Now another big leg up, and then we stalled at 1900 last week and the week before in anticipation of what Putin may be doing. And then we've bounced and we've rallied, and then all the uncertainty in a big, strong Tuesday, as it was yesterday, to start the new month. So gold remains bid. Technically, let's have a look at the indicators. I'm just talking about the price. If we look at get rid of some of these, you can see here the MACD is strong. Our signal line here is below the histogram. Histogram's quite tall. We're spiking up. The RSI here set 7, admittedly. So we're pushing into that overbought area, but the trend is by far overrunning that RSI, because the RSI has been on the 7-day basis here has been testing overbought for most of February anyway. But we've been rallying. The stocks here set 14.33 on this particular setting. Has come down a wee bit, but gold remains bid. Nobody's really trying to sell that, but remember, it can move quite significantly when it does move. The 20-day, for information, the 20-day moving average now sits at 1880. 1880 for the 20-day moving average for gold. Remains bid, Serene, my friend. Let me have a quick drink. So I was saying about that. The reason Osama, I'll come to your question in a minute, Osama, is because this is a 1 hour. Sorry, Osama, you have a very good question. I'll come to your question in a minute. Okay, just bear with me. Okay, because there's lots of lines get left on. I don't tidy up because of different time frames. Right. Let me just do these for these people, Osama, and I will get to you in a minute. Okay. Rothan, it's not a problem, my friend. That's what we're here for. So Dane is asking about euro pound. So Osama, let's follow the euro pound one. Right, so these charts, Osama, are my default daily setting. So a lot of the lines that are on here are the 1 hour time frame. So when we go up to the higher time frames, there appear to be lots and lots of lines on them. Okay, that's why it looks very, very cluttered when we look at the daily time frame. So that's why. So you got to clean them out. I have, if we wanted to look at this as a separate profile, because this particular profile, you can see my profile here, this is my default profile. So if I just So this has the like 15, about 15, 12, 15 sort of charts I monitor on a daily basis, basically. Obviously on my little whatever screen, this is 24 inch screen, I can't see many that big. See, so this is the intraday. If I just wanted to look at what the euro's doing, I've got another profile which just looks at the euro. So here is euro. So we'll use this chart, cleaner chart, Sama, my friend, for O'Dane when he's asking about the euro pound. So my euro pound setup on here is here. It's just a different setup. It's a white chart, and it's stocks, and it's got a simple moving average on it here. So again, it's just different setups and different time frames. This is based on the daily time frame. As you can see very clearly, the euro is going down against the British pound, and it has been not just if we zoom in, if we go up to the weekly time frame, you can see it's been doing that very significantly from the beginning of 2021. So it's a big downtrend for 2021 for euro against sterling, as sterling came back after the whole Brexit shenanigans and the expectation that sterling could underperform, had been under lots and lots of pressure because of Brexit. Here we went all the way to 90. What was that? It was 95, wasn't it? 95 here at the beginning of 2020. But anyway, so the trend remains very much down. That red line is the 34 period moving. Now, it's not one I use very much, but it's on this particular chart setup. Okay, so this is the stochastic set at an oscillator set at 10, 6, and 3, and the 34 simple moving average on this particular setup. Lots of strategies. There's lots of successful strategies. It's really about an application of it. But you can see on this particular setup, it's been under this key moving average and trending lower ever since. So there we go. That's an explanation of that. Oh yeah, I hope that explained. As far as O'Dean's concerned, so the daily, we're very much in a downtrend. We've been up to test this key level this week, but again, it's banging at these lows, isn't it? So this is a key support area where we are right now for euro pound, and we've bounced off it here. So because it's white, I'm going to have to change the color so we can see it. Okay, so we're right down here at .83 basically. .8310 is where we've sort of bounced from, but .8300, big support area for euro pound, has been for a while, and we're right on there at the moment. So if we go down the time frame, as you can see how choppy the MACD, the stochastic has been. So the sell signal there has gone under there. And that's another sell signal here on this end of day base, but it hasn't closed yet. You can see how the stochastics have crossed. I mean, it's in the middle. I mean, you're going with the trend because you're under the 34 moving average. So although this is a big down day, it's still looking, still with some more legs to the downside. On a 1 hour basis, again today, from the gap from Friday's close up here at 93.40 up here. This is Friday, 93.40. I'm sorry, not 93, 83. Sorry, I'm going mad. 84 is what I was trying to say. Oh, dearie me. So right, so .84 we got to on Friday, and as I say, now we're 100 pips lower, and for this pair, it's a big move, 100 pips. We're 100 pips lower at .83 virtually, and we've been under. I think that's taken us under 83. I think, where did we get to? Yeah, we've gone to 83.05, so not quite under 83. 83 itself is just about there, right at the bottom of the chart. So from 84 close on Friday, a near 100 pip move, 90 odd pip move. Down this week, and it's still biased to the low side. So Monday was down, Tuesday also closed down, and Wednesday is looking weak as well. So it's down to the downside. If you're a 4 hour trader, this is Friday. This week gap down, so it looked okay last week. Looked like it might have had some, but soon it's under its 20. Or this particular moving average now flattened out. Again, another cross on the stochastics there. On the close of that candle there, whenever that one was, that was yesterday. Was that yesterday? That was this morning. That's gone short on the 4 hour. but it's been short really since the beginning of the week on that opening collapse. So it went against us a wee bit, but it still then got short here, retraced a wee bit, but down, retraced a wee bit again. That remains to the short side, euro pound. Euro under lots of pressure because of the situation in Ukraine. London MUFC is asking about pound and the guppy. Let's have a look at this. Let's have a look at our let's have a look at different profiles of British pound and yen. This is our crossing EMA strategy again for the guppy. Again, we've got the daily time frame. What's going on? Well, unsurprisingly, the yen is a safe haven currency, so it's very much in demand in these uncertain times. And another one that triggered low here on Thursday. Big move down on Thursday, but it had already moved under. With this strategy, it's a bit flat. It's a bit of a weak entry. It would have been a weak entry there on the 23rd, 24th is the big down candle. Friday bounced a wee bit. We bounced a wee bit again Monday, but still closed lower. Big down day yesterday, engulfing Monday's action. Today's trying to recover, but we've been down to test 152.50. That's our next support. As you can see here, this 152.50 takes us all the way back to December. So the low for the year for the guppy was put in just yesterday. So again, that's biased to the downside. So if you're looking to trade, I don't know how you're trading this London myself or one Don. I'm saying London because it looks like London MUFC. It's trending to the downside. So if we go to the 4 hour, that'll be moving lower, looping lower. 4 hour this week. In fact, the last couple of weeks we've been moving lower, and the 1 hour looped lower, and found some sort of support this morning. Because we tested yesterday's low again at 152.75, so we found some support down there. And I've got black chalk. I need to change the colours. This is probably changing all the colours all the time. I'm changing the backgrounds all the time. Yeah, let's make it a dotted line. So yesterday's low down here on an end of hour basis at 152.75. We bounced up a wee bit into close yesterday. Looped to test it this morning, but then it's broken. So from a short here in the middle of yesterday, closed out this morning. It's gone long pound yen on a 1 hour trading basis. Here at 1 o'clock today, and we're up to the upside, and we're back to 145, 154 to the upside on the intraday basis. You're trading 4 hours, so it's 4 hour on the guppy. Let's have a look. I think that's what you're about to say, London. You're trading on the 4 hour. So let's have a look. So that's the 1 hour. So the 1 hour's turned around, okay, but the 4 hour has also turned around. However, it hasn't broken the 21 EMA, so it hasn't triggered to go long on the completion of this candle 40 minutes ago. So it's a very strong positive candle. I don't know if you've gone long or you're short London, but at the moment, we have to wait and come back in 4 hours or 3.5 hours time before we make a decision on that. But that's being short, retrace got you out. You could have got back in again on the gap on Monday's open. You might have been taken out there as it's recovered, but then we've been biased shorter ever since, and that would have certainly taken you. You might have been taken out again. I don't know how you're trading this and what strategy you're using, but on this particular strategy, it's looking to go long at the moment on the 4 hour basis, but the trend, remember, is still to the downside, a higher time frame trend. So the daily, although it's a good up day today, the daily is still down. We're still under the 5 period EMA, and you can see, obviously, we can't make a decision on today's candle because it's not completed. But at the moment, it's engulfed, which is a negative setup by the previous candle yesterday, which also engulfed Monday's candle. Okay, so be careful about any long-term longs on that one. It may break out, but here the daily remains short. So you're going to, if you get the 4 hour looking a bit spiky, but it might just stall here at this 154.00 level, you can see, that's been a bit of a pivot area anyway. We might even get as high as 154.50, but 155 would certainly be a certain major move to the upside on the 4-hour time frame for the guppy London, my friend. I hope that's answered your question. So let me just, I've jumped ahead of myself here. No, that was London was asking about guppy, and we found out. Right. Osama, I hope I've answered your question. Do you understand what I was saying before? Okay. Because these, my default charts are always defaulted to the hour time frame. Obviously, you have a lot more lines and a lot more support and resistance lines in the 1 hour than you would when you go up to the daily. So that's why the higher time frames look a wee bit messy. Okay, so this is the daily. The weekly looks even messier with all these lines on it. But that's because they're related to 1 hour time frames going back a long time. So yes, they do need cleaning up, it's just just a bad habit, I suppose. Okay. So where was I? We've done guppy. London says thank you. That's not a problem, my friend. Thank you. Thanks for being here. Somebody's asking about silver. Is that silver, Ade? I guess yes. Again, I'm assuming I'm going to read that as you mean silver. Commodities generally quite well bid. We were looking at Andrea and I were looking at palladium yesterday. A really strong move on the palladium market and platinum markets. Palladium markets in particular, and silver. In fact, silver I didn't actually look at, to be honest. Everyone's been a bit obsessed with the gold market. So again, this is the 1 hour time frame for silver market. Obviously, the line in the sand is our highs from Thursday, which took us to 25.58 or 25. In fact, it was a bit higher than that, wasn't it? Intraday, we went to 25.60. So 25.60 is that spike on Thursday. We were down Friday, recovered a wee bit Monday. Strong recovery yesterday. But we didn't get to Thursday's highs, interestingly enough, and then we've moved down today. So today was very much sideways action, supported at the big round one at $25 an ounce here. By those things, yeah, we are. There we are. 25 itself, the big round number is just there, and we've been sort of bouncing off that today. So not a lot of action on it. There's no clear intraday trend on that one, Addy. But if we go up the time frames, let's have a look. So 4 hour, again, sort of biased to the upside. We're over our 20 period moving average, which sits at 24.68. MACD signal lines rising positive. RSI sits at 60, sort of relatively negative, but still to the upside. So that's again biased to the upside. The 4 hour. 1 hour we just had a look at, didn't we? Yeah, it was flat, wasn't it? We're going down. We got the daily from the 4 hour. You can see what strong day we had yesterday, testing Thursday's high as well. So again, on an end of day basis, a bit like the gold chart we looked at before, a weak trigger here. Back in the middle of the beginning of February, a very weak trigger, having had moved down quite nicely. Thank you very much. So down, consolidated, a stronger candle there, but resist. But you see, we've been on a end of day basis. We've been over the 20 period moving average, and our crossing EMA strategy here has kept us long, kept us in. We haven't closed under the 9 period, and then we just whether you wanted to add to your position yesterday. Lots of people will have done that. Given that we've broken out of, I'm saying people, a lot of trade, that was that high for January, and we, see how that was the resistance. So that resistance for January also became resistance for February. We couldn't break it, closed under it, closed under it, closed under it, and then burst through it here on the first day of March. Silver remains bid, as do most of the commodities on the higher time frames. And again, I don't know what time frame you're trading this, but certainly the signal line here on the MACD and the MACD histograms supports a strong move up. 25.60 is 25.60 is that intraday spike from Thursday. So that's, you know, a close on an end of day basis over 25.60 is strong. Obviously, holding 25 is strong as well. Perhaps not as strong, but you know, again, the next support is this intraday high here from January, which sits there at 24.69 or 24.70 for sake of round numbers. Not sure what this is. It's obviously a trend line from something else, or from all right, okay, so it's down trend. So again, let's take that off. But you see, we've broken that clearly, haven't we? Let's take that trend line off. So yeah, silver breaking out and going back now to this cluster here. This takes us back. This is November, you see, so 25.60. That high was higher than the November cluster as well. So where do we stall intraday on Thursday? Interesting, we go all the way back again. Again, it was month end and month start, but that takes us all the way back to the summer, to July, August, the end of July, beginning of August, where we stalled at 25.60 on a retrace, a retrace of the legs as we were legging down. So down, consolidation, and that was on our resistance areas as we were moving down. Next one was that 24.68. Interesting, that, which is this one here in August, which is what we talked about earlier as our next support level now. Okay, so silver buys to the upside. Technically as well, the RSI is up, MACD is up, and the cable or the candle pattern is positive also. Okay, so that is silver, and the questions have all dried up. So Osama, so I hope that's answering your question, Osama. Okay, hope you're still here, my friend. So Adi, I hope that's answered your question about silver. Let's have a look. I've got some queries from Facebook. Dollar CAD. Yeah, we've got 2 minutes to dollar CAD. What about gold? Says Imran. With the war between Russia and Ukraine, what currency pair are mostly involved, affected? But it's easy saying. Right, let's just review that final question first, and I'll come to dollar CAD. Actually, let's put the dollar CAD on, Tamar, whilst I'm here, because that should move on the news, or it may not move on the news from Canada, from the Canadian Central Bank, which is out in a couple of minutes. So let's just go to the 1 hour. That's not the song, it's not about the messiness. So 127.40 has been our resistance today, and we're under 127. So big round number, we're under 127 at the moment. So Baduzi, the thing about the war, I mean, wars are horrible, obviously, but markets go on. You know, the ruthless things, they continue regardless of what's really going on in the world. Let me just get rid of some. Okay, let me just put me up a wee bit. Let me just talk about. So, as far as what's going on with regard to the conflict, what we've got is something called a safe haven bid. So that means assets that appear are safe, traditionally good investments, or safe investments. So it's things like the dollar, the Japanese yen, because the Japanese yen is a major credit currency of the world. Obviously, the dollar itself is the world's biggest currency and biggest stable government, and also the biggest army in the world as well. Love it or hate it, but anyway, the dollar is still dominant. So dollar, yen, the Swiss franc, because of the stability of the government and the strength of their economy. Big gold reserves in Switzerland as well. Things like government treasuries as well. They're very low risk investments. So treasuries are also seen to benefit from any uncertainty, any conflict in the world. Gold is another one that benefits from any conflict in the world as well, because it's a safe haven asset, because everybody, they've traded it for centuries. People like to touch it, feel it, and it's one of those commodities, or the commodity that people like to hang on to. Obviously, other commodities have similar sort of impact. So they're the things that benefit, and they're the things that come under that benefit from stress in the world. Things that get stressed out or get sold off are riskier assets. So things like equities get sold off, and equities were already weakening before the conflict broke out, but they've obviously moved lower, come under pressure because of the expectations of rising inflation as well. And that as oil prices go up, that puts more pressure on inflation, so it puts perhaps more pressure on central banks to actually act, even though there's all this uncertainty going on. So again, it's all in the mix and makes more uncertainty. That's the one thing that markets really, really hate is uncertainty. So I'm just going to hold it up there. I'm just going to go back to so look. Is it 5? Oh, no, it's still 10 minutes away. I don't know if I don't know which clock is correct here. I'm saying 16, still 10 minutes to 10 minutes to the Bank of Canada. I thought it was closer. I thought it was 2 minutes. I must have misread that. Yeah, 2 minutes. Now, Bullard's been speaking as well recently. He's a very Evans from the Fed is saying inflation is extremely high and that needs to be addressed by monetary policy, i.e. we need to increase rates. Powell's text is being released ahead of his 5 o'clock deposition, which is testimony, which is quite often. Let me just scan that way. Expect that appropriate rises in March. So they're still talking about rate hikes in March, and that's what the market's expecting. We've had we didn't see anything from the Bank of Australia, the RBA, on Tuesday. We are expecting a 25 basis point rise still from the Bank of Canada. Remember, the Bank of Canada was one of the first central banks to start moving its interest rates up last year, followed by the Bank of England. And again, Bank of England are expected to move again in March, as well as the Fed in March as well. So let's see what's going to come in 8 minutes now from the Bank of Canada. Let me just read Powell's statement. Fed Powell. This is a statement he's going to read to the Finance Committee. And then he gets grilled by different senators and different members of the House. We expect it will be appropriate to raise interest rates in March. The impact of the Russian invasion on Ukraine is highly uncertain. Again, it's very much central banks speak. Appropriate monetary policy in this environment must recognise that the economy evolves in unexpected ways. So he's using unexpected again. Fed will need to be nimble, which lots of people saying they haven't been nimble in the past to respond to incoming data and evolving the outlook. Will begin to reduce the balance sheet. Interesting. After the process of interest rates has begun, so they're not going to chip the balance sheet until they've started raising interest rates, which is, therefore the next meeting after the March meeting. If they do raise interest rates in March, that's what he's talking about. He's the main man. He's the main centrist. So yeah, that's really priced in there. Remember. Just a couple of weeks ago, we were, the market was, I think it was about 70–80% expectation that we're going to raise by 50 basis points. That's all disappeared in the invasion of Ukraine and the uncertainty that's raised. So although the inflation data has continued to peak to the upside, so although it shouldn't, it has, really, if they were going to be strictly just looking at the incoming data and the economic data and not the political situation. But anyway, we'll see what actually happens. But yeah, 50 basis points now seems to be out of the window for March. Although people like Bullard are still talking about 100 basis points by July. So although they put it off for March, again, the market might be, lots of people might be assuming this war in Ukraine is going to come to an end very quickly. Most analysts are saying the exact opposite. It could grind on for a very, very long time. So this expectation of rate hikes for 2022, which is being priced in from the middle of 2021 after inflation started raising its head, is all now starting to get pushed back yet again. So let's see what the impact of that is. Dollar CAD. Dollar CAD. Who's asking about dollar CAD? It was, no, it wasn't Imran. It was Tamor. Dollar CAD continues to trend lower at the moment, just ahead of, obviously this is slowing down. Nobody's been taking positions in like 5 minutes before. I mean, some people will be, the gamblers will be, but let's go down to the just for a bit of fun. Let's go down to the minute time frame. So here we are. We're 5 minutes now ahead of the Bank of Canada announcement, and the dollar's down, the Canadian dollar's up. This is obviously related to what Powell's testimony has said there, that they are raising rates, but it's going to be 25 basis points. It doesn't talk about projecting the path beyond that. I can't read this live while I'm looking at you guys. It says tentative to risk more upward pressure on inflation. So inflation, again, we've talked about expecting inflation to decline over the course of this year. as supply issues ease and demand moderates. But again, lots of people are saying, well, we're still going to be at 4 or 5% potentially, even by year end. Remember the Fed were, they're calling it transitory this time last year, and they hung on to that for a long time. So the assumption that they were very, very wrong may not be what plays out. But at the moment, that's what markets are thinking, which is what all this talk of heavy and strong inflation. But it was really on the other side. A caveat of that really was it really was some particular odd things that was driving things like second-hand cars in particular. But certainly that's Canadian dollar positive. If that news is broken, no, it hasn't come out yet. It's only 1 minute chart, but that's moving lower and moving. Again, if you're trading that, if you're scalping this, that's you've got some nice moves that already. There we go, sideways, and the big our candle there broke and went short here at 126.91, and we're at 126.78. So for a scalper, that's a nice move down for where am I? For I forgot I was on Leon. Sorry. For dollar CAD. So dollar CAD to the downside there. Sorry, I was just talking me and not the chart. So where we go. So Tamar, it's I say got the daily time frame. It's not a lot's going on. Sorry, not a lot's going on. There's no clear trend. We've been up to 128 and down and under 127. So we're really sort of range bound dollar CAD on the higher time frames. But today, intraday, we've been edging down because we've rejected this 127.40. And here on the 1 hour time frame, if you're going to trade dollar CAD ahead of the Bank of Canada, a bit risky, but it would have triggered short here at 11 o'clock this morning. You've been short ever since, and you've got some nice pips there from 127.15. We're down here at 126. What's that? 126.80. So there's 35 pips in the bag. For dollar CAD to the downside, Tamar, again, I don't know what time frame you're trading that one on, my friend. Everybody in Facebook, everybody in YouTube has stopped commenting. Yes, it is. So it's just my Facebook questions here now. Where's Taylor? So that's down. Maduzi, I hope I answered your question about the war between Russia and Ukraine. Dollar CAD, and Imran's asking about gold. I'll come back to gold in a minute, Imran. Let's see what the Bank of Canada do, if indeed they do anything. Bullard was supposed to be speaking today as well, wasn't it? Wasn't it? It was Bullard earlier. Give me a second. So let's have a look. What's going on? The news is just full of images from Ukraine and Kiev in particular, unfortunately. Kharkiv, the second biggest city, also came under missile and rocket attack yesterday. Very, very sad. A neighbour could do that. Right, so this is the 1 hour, so we're moving quite aggressive here. We've got news from the Bank of Canada, and it looks like it's the CAD's bidding. So they have in fact increased rates. So as expected, there was some question about whether they would actually do that, but they've increased their overnight rate to 0.5 of 1%, or by 20. So they've increased it by 25 basis points, from 25 basis points to 50 basis points. So it's still very, very low, obviously 0.5%, but it's a move. It's the second move that the Bank of Canada have moved in a few months. Not like the Bank of England's moved very aggressively. So this is added to this move down. If we go back to our 1 minute chart where we were short, weren't we? Short from here from 10 to 4. 10 minutes ago. So thanks very much. In and out, I'd probably bagged my pop some pips there because it's moved down really nicely. 126. I don't know how low we got there in that intraday spike. On that intra-minute spike, we got as low as 126.61. So, but again, still, again, follow the rules. Even as a 1 minute scalper, you're trending lower. The news is positive for the Canadian dollar initially. It may reverse quite quickly as well, but at the moment we're still short. Stop loss will be around about, well, again, stop loss should be around about the mid-moving average there. So if the candle closes over the mid-moving average, we get out. So 126.77.9 is where our stop loss is at the moment. Or if you want to do it on candle basis, as a trending lower. This is our current candle, so we count back 3 or 4, 5 sometimes. So 1, 2, 3, 4, 5. So if we're doing candle counting, our stop loss is back up there still. So we're trailing this one down. It may recover, as you might expect. So see what it breaks. So but we certainly got some nice pips on that move down on a 1 minute chart. But anyway, we're not trading. Anyway, there we go. Dollar CAD. There we go. It's moving quite aggressively, so it's taking us out of our short position. But some pips bagged on the 1 minute time frame there. So initial reaction on the news was to take it lower to 126.61. And we're back up 20 pips, not 20 pips, yeah, 126.80. So yeah, it was quite a significant move on the announcement there from the Bank of Canada. Excuse me, and obviously correlated to what Powell's got to say as well. Not just the Bank of Canada announcement, but because the statement was released before 5 o'clock. So the big move we had was on the Bank of Canada actually confirming they will be raising overnight rates 2.5 or 1%. So there we go. That's been some big news today. Starting with US Australian GDP missing expectations this morning, but only by 1 tick. We obviously had President Biden's State of the Union speech where he, as I say, he threatened Putin. Really, he has no idea what's coming. We're coming for your ill-gotten gains as well, was mentioned in the speech. As far as economic outlook for the United States, and there wasn't a great deal in it, to be honest. Obviously talked about inflation and rising prices and doing what he could to try and mitigate that for the US consumer. But obviously all eyes remain on Eastern Europe. Inflation out of Europe this morning was also heavier and hotter than expected. It came in at 5.8%. So the annualized year-on-year inflation in Europe is sitting at 5.8% for Eurozone, and the more important core sits at 2.7%. So that's also getting hot. This afternoon we've had some good jobs numbers from ADP, private payrolls. 475,000, so that should feed through to that. But about a similar sort of number markets are expecting out of non-farm payroll on Friday. And last month's was also a big reversal. It was negative 300,000. It's been turned to a positive 500,000. So again, another example of the tight jobs market and the pressure on inflation, because that's going to put pressure on earnings. And obviously, the S word has been mentioned, stagflation. The 70s stagflation is being mentioned now since the invasion, because of all the over aggressive moves by the bank. So we've got no growth, but we've got high inflation. That's stagflation potentially if the increase in interest rates throttles growth. And inflation doesn't come down, so it's that double-edged sword, which is takes us all the way back, back to the 70s. It was addressed in the 80s. We haven't really seen any inflation in global markets, particularly in the developed markets, the US, Europe, UK, for 30, 40 years, and that's what the issue is. But markets can, repeat themselves. History can repeat itself. So. Uncertain times indeed, and then on top of everything else, that was a worry enough about the inflation rising and interest rates rising and squeezes on wages, squeezes on businesses and households, and then we throw into this war in Europe. It's very nervous times and quite serious, or very serious situation as well. So, and obviously, politician and time and energy and money is being addressed to fix. Putin basically is what the market are playing out at the moment. So if there's no more questions, it's 5 o'clock here. Powell, I'm going to go off and listen to what Chair Powell's got to say. Obviously read his statement in a bit more detail and write up something about my thoughts on that tomorrow. If there's no more questions or requests, I'm going to call it a day, ladies and gentlemen. So let me just double check. Let me just refresh this because the question suddenly ran out. Gold. So let's just finish with the Canadian dollar. It's very much in focus. We go back up to the hourly time frame. So it's been short all day, really. I haven't rejected that 127.40 in the 200 hour. Triggered short here this morning, and it's tracking lower since we went back to test lows from yesterday, as we mentioned earlier, 126.60 zone. We're sort of bounced off that at the moment, but it's a big supply zone. So down. Yeah, October 2018, first rate hike from the Bank of Canada. So there we go. 126.60 has been tested again today. So again, Canadian dollar coming back to the good. Dollar index, as we finish, remains big. This is the daily time frame. We're sort of flattening out at 97.60. Euro's been under 111 all day. We're just still under 111 here at 110.95. So we've had to go back over 111, but can't hold it. So again, another one that's trending lower. Pressure on the euro remains. Dollar yen won't have moved much on that news. Indeed, that's the 1 hour. It just keeps tracking high, doesn't it? So there we've got to our 115.50 area we mentioned earlier. So again, dollar yen just keeps moving up. So dollar's bid against the yen there. Sterling cable. Recovery has continued from that trigger here on the 1 hour time frame. It's sort of holding it from the big leg down yesterday and this morning. So triggered long, having gone all the way down to 132.75. It's triggered long as we've got back over 133 at 133.20, and then we're cooling back to that. So we're sort of pivoting back through this area here from earlier today. We've been pulled back down to there. So 133.60. is a line on my chart there for a reason. Usually these lines are not just made up. So that's perhaps a target to the upside for cable. Australian dollar, again, holding its bid against the US dollar. So we're back at this 72.70 area we talked about earlier. We've been sort of looping through that, pivoting, oscillating through it. The classic oscillator there. So up and down, up and down, up and down. So 72.70 is our pivot. And as you said earlier, 72. 95 is the top and 72.45 is the floor from yesterday and today. And finally, oil and gold. Oil remains bid. We've got inventories in about 20 minutes, so 105.02 today. So clustering a bit today at the top, 107, 105, but again, very, very strong oil market. And finally, gold, everyone's favorite. We've come off our highs of the day. We certainly bounced off our lows of the day as well. We went to 119.14, and this intraday, this blue line here is the 50-hour moving average, which is providing. Is that 50 hour? Yeah, 50-hour moving average provides some support, and that currently sits here at 19.22. So there's a little supply support zone here, 19.22, 19.24, and that's been a previous resistance yesterday going up. So a bit of support there, and again sliding sideways at the moment. So we finish the day. So thank you very much, everyone. Stay safe. Stay particularly safe wherever you are in the world. Give someone you love a hug, and we'll see you all again on Friday. Andrew will be here for non-farm payroll on Friday. We've got join us for a webinar tomorrow. I can't remember what the I should know, shouldn't I? I can't remember what the subject is tomorrow. Let me just have a look for it. Tomorrow's webinars as well, with I think Otto's owning tomorrow. So let's have a look. Tomorrow's webinar is the ATR. I thought I'd remembered why, because ATR, one of my favourite indicators of all time tomorrow. Look at that. With Otto tomorrow. So the ATR and the parabolics are tomorrow with Otto, and obviously lots more to come in March from our webinars. Part 2 of my swing trading strategies next Wednesday, money management with Andrea next Tuesday. So do join us if you can. So take care, everyone, and we'll see you all again, I say, with Andrea on Friday and with Otto tomorrow in our webinars. And until then, I say be safe and stay safe. All the best, everyone.